This tax season, CBS News Philadelphia is in your corner. I'm Josh Sidorowicz. We want to make sure that you don't leave any money on the table or lose out to scammers looking to rip off your refund. Tax experts say there are more opportunities than ever this season to boost what you could get back from the IRS if you know how to claim them. The average refund is now up to nearly $4,000, but with major tax law changes and confusions around new deductions, you could be at risk of leaving some serious money behind if you're not careful.
There are more changes to the tax law than I've seen in 40 years all at once. And so we're certainly seeing a great deal of misunderstanding on the new tips deduction, the overtime deduction, even the car interest deduction, and certainly the senior deduction.
Let's talk about some of them right now. Tip workers can now deduct up to $25,000 in qualifying earned tips, and many employees can deduct up to $12,500 in overtime pay too. While seniors 65 and older qualify for an additional $6,000 deduction. Now, when it comes to credits, many often overlook the earned income tax credit and the child tax credit. Jackson Hewitt Chief Tax Officer Mark Stieber says many taxpayers think these credits and deductions apply automatically, but they don't. If you leave it off, it stays off.
Some people don't have the information and figure, well, I'll just leave it off. It can't be that valuable. And it is that valuable. And the IRS will not just flip around and send you a bigger check because you missed it.
Yeah, he says many lower income Americans could qualify for up to a dozen different credits. But in Philadelphia alone, officials have said that roughly 40,000 people leave money on the table every year. And that's not the only mistake that can cost you or slow down your refund. Experts say waiting until the last minute to file is never a good idea. It might sound obvious, but surveys show as many as 1 in 4 taxpayers procrastinate, and rushing means you risk forgetting important forms or claiming those available credits. Goofing up basic info like Social Security numbers is also pretty common. Of course, a correct number is critical, especially when it's for your children, because many deductions and credits for kids require their Social Security number too. And finally, even if you think you don't have to file, it's best just to do it.
There are some people, like maybe college students that worked a side job and they just don't file because they make under the income thresholds. But if you make under that and you had federal taxes withheld and you may be eligible for a refundable credit like earned income tax credit or some of the education credits, you should file because you can get that money back.
For tax year 2025, you are not required to file if you made under $15,750 for a single filer under 65 years old or $31,500 for married filing jointly. Those numbers are slightly different if you're older than 65, but again, as you just heard, if you didn't make that minimum, there are still instances where it can pay to file. Tackling tax season also means watching out for scammers looking to cash in on your money. They are getting better and faster at stealing your refund before you ever even file. But certified financial planner Regina McCann-Hess says one simple number can make all the difference. She recently joined us on the In Your Corner podcast. She highly recommends signing up for what's known as an IP PIN through the IRS. It's a free and important step that can secure your refund from a scammer.
What's happening is there's a lot of identity theft out there, and people will file a fake tax return in your name and get the refund sent to them, and you never know it. Until
you go to file.
Right.
Yeah.
Until you go to file and the IRS says you already filed your return. And then you're like, what? So that 6-digit PIN helps protect that from happening. Nothing is perfect, but it does help prevent some of that activity.
One simple step that could make a world of a difference.
Yes.
Once you request that IP PIN, the IRS will automatically generate a new one for you every year. But it's not the only scam you should know about this tax season. A new surge in IRS scam robocalls is also hitting our area, and the threats they are making are getting more aggressive. From saying you have an arrest warrant to a lien on your home, even pending litigation. We're in your corner so you can spot the script if they call you.
This call is to notify you that a criminal case has been registered against your name for tax evasion.
This is just one of the calls. The scam call blocking firm Nomo Robo says it's intercepted already this tax season. The company monitors hundreds of thousands of dormant phone lines, so it knows if a call is coming from one of those numbers, it's almost certainly fraudulent, and can then intercept it before it rings anyone who then subscribes to Nomo Robo's call blocking service.
We're seeing really a lot more aggressive tactics.
Matt Mazinko with Nomo Robo says tax scams surge every year, but this year, he says, they have tracked a whopping 400% jump in calls just since January, mentioning IRS, Internal Revenue Service, and taxes.
In years past, we would see things like fairly innocuous stuff like, hey, we have a one-time payment for you from the IRS if you file our taxes with, file your taxes with us, or things like, we can help you file your taxes, just call this number. But they're, not really tap dancing around it anymore. They're coming straight for the throat in terms of, trying to be as aggressive as possible and create as much fear as possible.
But of course, it is not the IRS calling. The agency warns it will never threaten legal action, promise a refund, demand payment through text or email, or call and ask for your credit card information over the phone. Many scammers can even spoof the caller ID to make it look like it's coming from the IRS. So that's why it's always good to call back using the number from the official IRS website to confirm. And be sure the only IRS website or email address you are trusting is the one that ends in .gov. A lot of these fake sites, they're designed to look like the real thing, and they can look more convincing now than ever, thanks to artificial intelligence. After the break, when you should and shouldn't use an AI chatbot for your tax prep help. Some filers are turning to artificial intelligence for help this tax season, but before you let an AI chatbot do your taxes, we are in your corner with how it could put your refund at risk. We have more answers at our fingertips than ever. They just might not be the right ones.
I did ask Copilot
Mike Valenti,
what the concerns with using AI for tax prep was.
tax director at Bryn Mawr Trust, jokes that AI is great at knowing its limitations.
It does a fantastic job of telling you what your concerns should be.
He says anyone considering a chatbot for tax prep should proceed with caution.
AI, that's not your final answer. That's not, the end-all be-all for you, but it's a good start.
Even Google's Gemini chatbot agrees, telling me it's not a replacement for certified tax software or a CPA when I asked it to help prep my taxes. But it can help you organize receipts or explain unfamiliar tax concepts.
If it's just generic data, it might actually give you a spot-on explanation of a certain deduction.
But Valenti warns AI chatbots struggle with nuance. For example, many of the new tax breaks this year phase out the benefit based on your income. For that reason, he advises against it to determine whether you qualify for a certain deduction or to prepare your entire return. And he says you should never upload any sensitive information.
Certainly don't want to upload, say, your 1099s or upload your W-2 or any personally identifiable information, because there is nothing secure about these clients.
And bottom line, AI or not, it's your name on the return.
If you misrepresent something, you can't write back to the IRS and say, hey, ChatGPT told me that this was okay. You are ultimately responsible for what goes on your tax return.
With all the changes to the tax code this year, it can be tempting to want to lean on AI, but he says, and this might sound counterintuitive, but the more complex things get, the more likely AI is actually to get it wrong, because it might pull information that's outdated or from unreliable sources. Help from a human tax preparer, that might be the better option, but you want to be careful who you trust. Not all tax preparers are created equal. Someone promising that they can get you a big refund is a big red flag, and it's not the only warning sign you could be dealing with a scammer. At Philadelphia legal assistants, they're often the first to hear from people burned by a sketchy tax preparer.
It's rampant, might not be too strong a word to describe the levels of funny business that goes on.
Laszlo Bay with the PLA's Taxpayer Support Clinic says that untangling these cases can take months, even years. So a little extra vetting up front can save you a whole lot of time and money later.
There are lots of good, honest tax preparers and companies and businesses, but the way the tax system is set up is easy money for those who don't have scruples.
He says a big refund promise before they know anything about your income or family situation is a big red flag. A legit preparer needs to ask questions, lots of them. And if they won't let you review your return before they file it, that's not normal either. They must give you a copy. Watch out for vague or hidden fees, too. In Philadelphia, preparers are legally required to tell you their prices up front. But one of the biggest warning signs is a preparer who won't sign your return or include their preparer ID number. That's because the IRS requires it.
They say they're doing your tax return, but then if you actually look at the tax return, that person's name appears nowhere on it. There's nothing to tell the IRS that it was someone other than you preparing the tax return. Those are called ghost preparers.
And keep in mind, you might not need to pay anyone at all. Most taxpayers qualify for the IRS Free File program online. VITA, the Volunteer Income Tax Assistance Program, offers free IRS trained preparers as well. The United Way also runs myfreetaxes.com for online help, and the AARP Foundation offers free tax aid in person and online. We have links to all of these resources under this story on CBSPhiladelphia.com. We are in your corner to help you tackle tax season successfully. Certified financial planner Regina McCann-Hess recently joined me on the In Your Corner podcast to talk about some of the biggest changes this season and how to make sure that you're not waiting on a refund. Every time I'm talking about taxes, I always play that scene from Seinfeld.
Oh, no.
Where Kramer, he's talking about how companies, they can just write it off. And Jerry goes, you don't even know what a write-off is. Hey, I'm Josh. This is the In Your Corner podcast from CBS News Philadelphia. It is tax time once again. Cue the grumbles here. And whether you are someone who maybe likes to get yours filed and out of the way, or you are among nearly 1 in 4 Americans who put it off for as long as you possibly can, there are a lot of changes you need to know about this season. From deductions that could keep more money in your pocket to credits that could give you a bigger refund. Certified financial planner and founder of Forge Wealth Management, Melbourne, Regina McCann-Hess is here to help us walk through all of this.
All this fun stuff.
Oh, so fun. But no, we appreciate that you're here because there's a lot of different things here, and you don't want to leave any money on the table or mess up and have the IRS, come and knocking on your door, right? So look, at this point, if not already, you're getting your W-2s and other tax forms in the mail, or they're coming to your email inbox. IRS officially started accepting returns a few weeks ago. So just how behind am I if I have not started on any of this yet?
I think you're about average.
Okay.
It's okay. You have time.
All right.
But your accountant will not like you if you give it to them on the 10th or 12th of April.
Yeah, we advise not to do that.
Do not.
All right. So as I'm starting to get all my forms and everything, where do I begin? What do you advise people to do?
I think you need a checklist just to keep yourself organized. And if you work with an accountant, they usually give you a tax organizer. It could actually be as big as a binder. You never know. But it's a really good checklist. But if you don't have an accountant, if you're able to do your taxes on your own, then you can create your own checklist. I mean, basically, just like, what do I usually get in the mail or email every year around this time? The 1099s, like you said, the W-2s, anything work related, anything. If I have business accounts or investment accounts or bank accounts, did I get interest? Okay, I should get a tax form from them. If I took money out of a retirement account, I should get a tax form for that. Regardless of what the tax form is called, know where you took money out of, know where you're earning interest and dividends and things like that. If you've earned money or took money out of an account that year, bought, sold anything, you should probably expect a tax form.
High yield savings accounts, all of those things.
Yeah.
And they do they kind of come all fast and at once. So yeah, making sure that you've got a list of exactly what you've got and what you're missing, because sometimes you might need to contact the IRS, right, if you haven't gotten certain forms, or the specific institution.
Yeah, the specific institution. Now, the forms regarding the retirement accounts usually come out first. They're really easy because it's, easy. Here's what you took out.
Yeah.
Here's what you owe. Banks are usually pretty quick. The investment accounts, your brokerage accounts and whatnot, they're the ones that trail sometimes into March, because for them to give you that tax form, they need to get the information from XYZ mutual fund company who's giving those dividends. They have to wait for the reports from them to be able to create their own tax form for you. So there's a delay there.
So even if you want to be proactive, in some cases you have an excuse.
Yes, you can get everything else ready though. Yes. And those forms do start coming out in February. We have them coming out in waves. So we've had a couple waves already, but we also know that we have a wave or two in the first week of March. So those clients are usually grumbling a little bit more, and I completely understand why they grumble.
All right, so just keep that in the back of your mind
Yeah.
if you're maybe still waiting on a few. Okay, so you've got all the all the documents you need. You got your checklist. What are some other things to consider as you're going to file? I'm thinking maybe life changes or something that happened in that tax year.
Yeah, anytime there's been a birth, a death, a divorce, things like that, you want to be cognizant of. If you were divorced halfway through the year, you are now filing a separate tax return. If, however, you became a widow or a widower in 2025, regardless of when during that year your spouse died, you can still file married filing jointly for that tax year. And that saves a little bit because, obviously your life is in transition. There's a lot going on, especially emotionally. For you to get that one extra year of joint tax return does help.
And when you were here last time on the podcast, we were talking about finances and divorce. There's also the sort of, you can be in an interesting window where as long as you were still married up until the end of the tax year, right? Even if you're divorced now, you would still file
married filing jointly. Now, obviously, you both have to agree to it, but there's a lot of reasons why you would want to still file married filing jointly, because if you file separate, the IRS does not like that, and they cut you a lot. Like, you lose a lot of deductions and things like that, so you're going to pay a much higher tax bill.
You just have to come to a mutual understanding.
Mutual understanding ahead of time, and maybe in writing. Like, if there's a tax refund, how is that going to be split? If we owe tax, how is that going to be split? Like, what percentage does each spouse pay? That should be agreed upon before you file that tax return.
So we've been talking about this now since last summer with the passing of the big spending bill. There are a lot of changes to deductions and different credits that will be impacting a lot of taxpayers this year, potentially meaning a bigger return for you at the end of the day. Can we go through some of those now?
Yeah, absolutely.
So I think one of the big ones that people are very excited about, there's the no tax on tips.
Yes.
Right?
Yes. Tips, it's up to $25,000. That's huge.
Yeah, and then so you're deducting whatever that amount is it's got to be qualifying, reportable tips, right?
Yeah.
And it's only, there's qualified occupations, right? I think the language was like customarily workers who would get tips.
Yeah, like the people working in restaurants, not the person working at, I don't know, the convenience store and is now asking for tips.
Yes, exactly. Yeah, so there's a good caveat there to try to minimize any sort of abuse of that. Overtime, that's another big one too, right? It's up to, a certain amount, specifically, I think, on the time and a half portion of your overtime. And that's taking your tax liability from your overall income, right?
Yeah, and that's really going to help families in the United States. They're working overtime, to help their company, but also to help their family. And if some of that is, excluded from taxing, that's great for the families.
And these all have phase outs. What does that mean?
So if you make too much money, you lose the deductions. So there are charts on the Beautiful Bill Act that tell you, yes, this looks great, and you can have it. And then you see the fine print. Always look for the fine print, because the fine print says, well, you have to make under this amount. And if it goes beyond that amount, it's phased out. And then after a certain amount of money, that earned income, you totally lose it.
So it's kind of like a scale. There's not a one, like you get it or you don't, but depending on as your income increases, you would get less.
Yeah, at least that's the way I read it. I saw that after a certain point, there was a phase out, and then there was a drop off.
There is. Yeah, I want to say the range is like 150-ish to 250 or something like that. Yeah. What are some other big changes that you're hearing questions from your clients?
Well, one of my favorite things is the deduction for seniors over 65.
Yes.
And I am loving that, because that is helping so many seniors in America. So if you're a single senior over 65, you get a $6,000 additional deduction. That's in addition to your standard deduction. And then if you're married, you both get that $6,000. So that's $12,000. Yeah,
that's huge.
It's a lot of money, right? Plus the standard deduction, which is a great amount of money. So that's able to really drop people's earned income down quite a bit.
Yeah,
that's my favorite thing.
Yeah, knocking down a huge tax liability there. There's also there's an interesting one. There's a car loan interest deduction.
Yeah, I got really excited about that, Josh, because I was looking for a car, and I'm like, oh, I get to exclude up to $10,000 of the interest. I'm like, game on, I'm buying my car. And then I read the fine print.
Yeah.
And I made too much money for it.
Okay, so there is an income phase out. Okay,
yeah, but it was part of my reasoning for finally buying a new car.
Get out.
It was. Well, my car was almost 10 years old. So
did you still get the new car?
I darn right did.
All right, so you still get the new car smell. That's something, right? Yeah.
But I don't get to deduct the interest.
But yeah, to your point, you deduct up to 10 grand in interest on the loan for a new car. And I think there's also the caveat, it's got to be final assembly of the car.
In America.
Right, which is hard too because so many cars are made with parts and things from all over the world now.
Yeah, but you can find, oh, believe me, I had my short list. You can figure out which cars, and even though they have a foreign emblem on them,
yes,
a lot of them are made here or assembled here. So I'm sure there's some kind of a list that you can make up for yourself.
Yeah, it's not as black and white anymore in terms of figuring out what's an American-made car anymore.
No,
yeah.
But also within each car brand, not every single car is manufactured here.
That's very true.
Right? So you do have to be careful of that.
Yeah, you get a Ford that's made in China or Mexico or something. Yeah.
Right? Mm-hmm. Now, the other thing is, and that's a good point, American-made cars are sometimes made somewhere else and brought in. The other thing is, some of these, like I believe the car interest and the senior deduction, they're not permanent. Like the senior deduction ends in 2028 unless Congress is kind enough to extend it. And I believe the car interest may also be a short-term thing.
Mm-hmm. Which was the case too. A lot of these are some of these were extending, right? Ones that were in the last spending bill. So that's always a good point as well. And then a lot of people were very excited about the increase on state and local tax deduction caps. Huge increase from like 10,000, I think, to 40,000 if you're a single filer.
Yeah, it's great.
And those will have annual adjustments too.
I believe
think, right?
so.
A 1% annual.
They did do that overall in some of the tax type bills in the Big Beautiful Bill Act. They added inflation kickers because some of these numbers haven't changed in years to decades. So they're finally adding inflation kickers to some of them.
And important too to kind of differentiate a deduction versus a credit, because even like the car loan one, initially I was thinking, oh, it's a credit. It's not like the EV credit.
Oh yeah, no.
Right.
It's
So
different.
what's the difference?
So that's a tough one. I think I will defer to the accountant for that one because I might screw it up.
Well, goes to okay. So I don't feel so bad not knowing it.
I think I know, but I don't want to like tell your listeners bad info.
On the topic of credits, there's also I think a larger child tax credit as well that parents can claim too. That increased. And those changes, it'll now increase annually based on inflation, which is good. So that's a big one for parents.
And for parents also, 529 plans, you used to only be able to use $10,000 for K through 12 tuition. You can now, it's now up to $20,000 a year that you can pull out.
Oh, okay.
Yeah. Well, I mean, it's good and bad, right? Because you're saving that money for college.
Yeah, you don't
but
want to
then
be.
you're starting to take it out early. So it's like, are you going to have enough left for college? So there's a thing you have to think about there.
Can medical expenses be deducted?
Well, it's according to your adjusted gross income, I believe. There's a percentage. I'm not sure if it's 7.5 still.
Okay.
It's over that amount that would be able to be deducted. So, you know, obviously you would have to be pretty ill or not have insurance. Well, it's pretty easy to spend a lot of money once you have a big illness because we have great healthcare, but it's extremely expensive. Another place where I have seen that used is when retirees move into retirement communities that are phased, like it's independent to assisted to nursing home. But they have a caveat as part of that, as part of their entrance fee and their monthly fee, there's part of that is medical. So a lot of them, especially the first year moving in, because they have to put such a large down payment down and part of it's medical, that year, usually a lot of people get to use it.
This is why we all need tax preparers.
Yes, I will not. Listen, I do not do my own taxes. And this is why, like, I know enough to be dangerous and to educate, but I need my accountant.
It just goes to show,
all day long.
Everyone still needs a professional, right?
Yeah.
Real quick, a lightning round. Best way to get my return the quickest?
Oh, electronic. Yeah, and actually, it's rare that you can actually do a paper file return anymore anyway. I was very resistant to this in the beginning because I like my paper, and now I've gotten over it because I have the PDF copy. But the paper, they don't really want the paper. Electronic is safest anyway. And I know also you'll want to get a 6-digit code from the IRS for filing.
Yes, I was going to ask you about that because this is a good way to protect yourself.
So what's happening is there's a lot of identity theft out there, and people will file a fake tax return in your name and get the refund sent to them, and you never know it.
Until you go to file.
Right,
Yeah.
until you go to file and the IRS says you already filed your return. And then you're like, what? So that 6-digit PIN helps protect that from happening. Nothing is perfect, but it does help prevent some of that activity.
Yeah, I mean, you'd be surprised. It happens more than you might realize. I've had viewers reach out and
Oh, yeah.
they couldn't believe it
Yep.
because all it takes is just enough information about you. And God knows we've had so many data breaches and other things. I'm sure everything's right for the picking if they can
Yeah.
piece it together.
Oh, yeah.
Do you know, you have to get a new PIN each year?
You don't.
You don't.
I don't.
So it's like a
mean,
one and done. You get
yeah.
it. You don't have to think about it.
Yeah, my PIN, when I get my tax organizer and then I sign electronically, it's there. I don't have to reapply for it every year.
One simple step that could make a
Yes.
world
Yes.
of a difference.
Yes.
And then finally, too, if I owe money, best way to get that payment to the IRS.
Okay, you can do the old-fashioned route of writing those things called checks. I don't know. Does your
I think I have some of those lying around. I don't.
Do you have
know,
any?
yeah.
I still have checks, and I do still write some checks sometimes, but a lot of times people are now electronically paying their payments to the IRS, and that way there's no question as to whether or not it was paid and was it paid on time, because sometimes you'll have a payment, especially if you mail it, it gets lost. Or the IRS doesn't cash the check. And then guess what? You get a penalty because you didn't pay your tax. So the electronic payment is becoming more and more popular. But you have to be comfortable with the IRS having a direct link to your bank account.
Sure.
But guess what? They know how to do it.
And it is nice, too, because then the refund automatically gets
does.
put into through an what is it?
ACH, yeah, it comes-
deposit.
And that part's okay.
Yeah, we like that. We like the
Oh,
getting the money
yes.
part.
Yes,
Yeah.
Santa came. Yes.
Regina McCann, thank you so much for your help as always on this. Regina is the founder and a certified financial planner at Forge Wealth Management in Malvern. And we always enjoy you coming on and helping us through. It's a lot of numbers.
Yeah. But I'm thinking to myself, I'm like, wow, I was laughing a lot today. I don't know how.
Who
but
knew we could have fun with taxes?
I know.
I think we've accomplished something no one thought we could. So, Regina, thank you.
Thank you.
To find all of our episodes, you can search In Your Corner podcast on YouTube, and you can subscribe to the CBS Philadelphia YouTube channel so you don't have to go search for it each time. I'm Josh Sidorowicz. This tax season and beyond, we are always in your corner. Thanks for watching.